Okay, I think we'll get started. Welcome everyone to this week's week in review. As ever, quite an eventful week. Lots of things happening that we'll sort of dive into over the next hour or so. We had sort of major macroeconomic developments concerning the US and sort of broader global economy and the impact that had on the crypto market, changing the winds, some would say, or at least that's how it appears based on recent price action. New layer ones propping up, raising funds and prompting questions among various participants in the space. Solana is opening a physical store, and the SEC is going after Coinbase. This week we also saw various developments in the NFT space. Big one with Damien Hearst and the deadline closed for his NFT physical burn event, and we'll dive into that as well a little bit later on. So to kick us off, Tim, could you start what's going on at Coinbase? Their stock plummeted this week. It's like funds dumping, and the SEC is seemingly after them. Can you unpack what's happening there?
Yeah, absolutely. Thanks, Christian. So this story begins last Thursday on the 21st of July when there was a joint sort of action taken by the Department of Justice and the Securities and Exchange Commission. And what they did is filed this lawsuit against a former Coinbase employee and his two associates, accusing them of basically trading on insider information. So the basic gist of it is that this former Coinbase employee, he would know when certain assets would be listed on Coinbase ahead of time. And what he and his friends were doing were buying them in advance and then selling into the pump. Because as is often the case when an asset, especially one with a smaller market cap, gets listed on a big exchange like Coinbase, it's seen as a very bullish sign. So a lot of people buy, hoping that the asset will go up in price. The interesting point about this was that in the lawsuit, the SEC sort of declared, the 9 crypto assets that are on Coinbase are actually securities. And it kind of came out of left field a little bit. I'll just get a list up and go through a few of the more notable ones. So there was Flex's AMP token. That one's fairly noticeable, fairly notable. It's in the top 100. There's also Rally's RLY token, Rari Capital's RGT, and then a few more smaller tokens that maybe people haven't heard of. So that led into what happened this week, where Bloomberg got an inside scoop that the SEC had actually fully launched a probe into Coinbase regarding these assets, crypto assets that they're now saying are securities. And so there's some kind of ongoing probe there, because they're not too happy that Coinbase has facilitated what they perceive to be securities exchanging on Coinbase. So they're sort of, they've launched an investigation there. And I think regarding what the SEC's position is here is in the original sort of filing against the former Coinbase employee, they made the argument that because these 9 tokens were managed by companies and in their opinion wouldn't be able to survive or would lose value. I shouldn't have said that. They wouldn't be able to survive or continue operating without the company's support. They sort of asked the question of if the company behind the AMP token, Flexer, just disappeared tomorrow, would AMP continue functioning? And if the answer was no, then that's how they were judging whether or not this was a security. So I guess from this, we can determine that, things like, Bitcoin, they've said before that they view as a commodity, but it kind of opens the door up to discussion here of which crypto tokens could the SEC come after next. Obviously all of this controversy has hit Coinbase pretty badly. They've responded by posting a couple of blog posts. There was one that was titled, it was very straight to the point, like Coinbase does not trade securities, something along those lines. And they've since sort of clarified that point in a follow-up blog post, and they've launched a petition as well. They've sort of reiterated points that a lot of other people in the crypto industry have said about how the SEC are like, they're not very clear about the guidelines for which crypto assets they think might be securities, which ones aren't. And I guess this all culminated in, I think it was Tuesday's trading session where Coin, which is Coinbase's stock that trades under the ticker Coin, it dropped about 21% in a day. And then the following day, the Wednesday, ARK Invest, which is actually, I think was at the time the third largest investor in Coinbase. They said they'd sold $75 million worth of Coinbase stock. They've taken like a $280 million loss on that as well. So, bad news for ARK, bad news for Coinbase, all around there. I think that sums up the main points. So, I'll throw it back to Christian and see which direction we want to take this.
Well, I want to jump in here. I thought their blog post was kind of hilarious because the reasoning was they don't list securities on Coinbase because they vet that because they have a process to make sure securities don't get listed on Coinbase. I'm just like, that is some sound reasoning right there.
It's like circular logic, isn't it?
Yeah, I mean, it's been evident for a long time that most exchanges are, of course, listing securities. And unless the definitions for securities change, I don't expect that to move anytime soon. So I kind of find it expected that Coinbase is taking the position that they're not listing securities, but simultaneously, it's not a position they're going to win right now unless the regulatory regime changes significantly.
Yeah. To follow on from this, Tim, you mentioned there were two blog posts, and so there was the first one that was called something like Coinbase does not list securities, period. And then there was a second one that was more like a kind of like a rallying call in a way, because they were announcing that they'd prepared this petition that they'd sent to the SEC to change basically to urging the SEC to stop using the Howey test to determine whether like a crypto asset is a security. The Howey test, as a quick summary, is basically based on like a court case from like 60 years ago or so, and it's basically determins whether there's like a reasonable expectation of a profit from an instrument derived from like the actions of someone else, and so that could be like a centralized team or this kind of thing with regards to crypto. What did you guys make of this like petition? Is that going to do anything to sway the SEC, or is it just a bit fruitless? Like, how do you think that's going to go? Did either of you have any thoughts on that, Mitchell, Tim?
I don't think it's going to change anything in the near term. I mean, I still don't think that the cryptocurrency market has sufficient political sway. I mean, they do have a moderately sized lobby, but I don't think that a sufficient amount of, at least in the US, political donations come from like people that care about crypto as a political issue. It hasn't happened yet. And there hasn't really been one party that has taken on cryptocurrency or blockchain as part of their platform. So I don't even think that it's really. I'm not sure how much leverage that's what I'm trying to say. I don't know how much leverage the crypto community has in changing policy in the US just yet.
I agree with what Mitchell said about like the lobbying side of things, and the SEC is definitely going to maintain his position as a thorn in the side of a lot of industry leaders. However, I do feel that this kind of feels a bit desperate from the SEC. Like, we know that there's there's regulation coming in the pipeline from the President Biden's executive order, and we know the CFTC, I believe it is the Commodity and Futures Trading Commission, also sort of like weighing in on crypto assets as well, and they seem to have a much more open and I guess like conservative view on regulation than the SEC. And it feels to me like, well, I mean, it's kind of felt like this for the whole time. It's like the SEC are really trying to like get their claws into crypto so that they can like regulate stuff like quite harshly, implement the same kind of rules that securities exchanges, like the New York Stock Exchange or the NASDAQ follow. And, people who are against that position saying like, well, maybe, this is different to stocks for companies issue, and we need a different set of rules. The SEC doesn't really want to hear any of that. So I feel like they're stepping up their like enforcement action here wherever they see the opportunity to, before, I guess, one of these other governmental bodies or politicians in Washington rule otherwise, perhaps.
Yeah, I mean, I would agree with that. It definitely feels like in, basically just the last week or a couple of weeks that, the SEC is really making its sort of presence felt in some ways. Like we saw the chairman, Gary Gensler, share a video just a day or so ago where it was kind of comparing like exchanges to like traditional sort of traditional trading venues, and it does just seem like a lot of the time, this may be a controversial take, but they seem to just be kind of trying to like muscle in a way and like signal their authority. Like when Coinbase did the Lend product, I think it was last summer or last year, and the SEC basically said if you launch this, we'll sue you. It's just quite like a strong armed approach to things. What's your take on that, Nivesh? Do you think it's going to kind of come to a head, and is this going to have like an impact on the regulatory space? Are you worried about the SEC's possible intervention, or?
No, not really. I think we discussed it last week as well, that the regulators have been like fairly like they have delayed their responses or their actions where they could have easily taken like harsh decisions. So, and like one thing that I'm feeling right now is because we are in a bear market, these things tend to get a bit more amplified. We are worried that if SEC does something wrong, then there's going to be a huge price crash. And this wasn't the case, let's say 6 months ago. Like we discussed things, and regulations have been like a part of this industry eternally. I don't think that even during the bull market, we weren't discussing some announcement like Biden's executive order or Trump going ahead with an emergency, I think, bill or something in December. So yeah, it's kind of an ongoing process. The international regulators like the G6 or the G7 and these bodies are also involved, and unless and until they come up with a solution where they can actually differentiate between tokens, like among which of decide which of them are securities and which of them are not, we'll surely have SEC coming after some of these. And I said it last week as well, they're just going to do away with the fine and settle with the SEC, and then either continue their business in the space itself or just shut down. So apart from that, I don't see any large, I guess, drawbacks or headwinds from the regulators. If we just continue building, it's gonna be fine.
Okay, so yeah, the impression I get from everyone seems to be that regulation is coming, but the SEC is not necessarily the biggest thing to worry about right now. Cool.
Christian, in your opinion, do you think that the Howey test should be changed, or do you think it's a sufficient standard for analyzing what should constitute a security or non-security?
Do I think it should be changed? Well, it does just seem like I think it's from like a 1946 case that is kind of come about, and that does seem relatively dated. This is kind of a side tangent, but I did jury service like this time, I think 2 years ago, and from that experience, this is the UK obviously, but you get an impression of just how like I guess like dated some like legal systems and this kind of stuff is, from like sitting in a court and watching how it actually comes together. And this is kind of the same view I have of things like the Howey test. It's like a rule that was established like many years ago, and it doesn't necessarily fit as well in like a digital first world. That would be my take there. Cool. Yeah, go on, Mitchell. What were you gonna?
I was just gonna say thanks for sharing your opinion there. I was just gonna add before you move on to the next topic is just because the Howey test is old, it may need some updates, but I think that the criteria applied by the Howey test are quite reasonable. Like, they don't seem to be things that would go out of date. Like saying that a security is something that is basically an investment of money in someone else's work or an enterprise that makes, with the expectation of making some sort of profit from it. Like, I think that standard is not something that necessarily needs to change with time. So that's the only comment I'd make about the Howey test.
Yeah, I mean, with respect to crypto, it just raises questions of like, who does the work kind of thing. Like, this is something Tim wrote about this week. There are people warning that ETH will be a security soon because it's going to be proof of stake. So if you're staking, it's like the question of if you're buying Uni, is like the Uniswap team doing work? Does that mean that like you're sort of expecting a profit off the back of what they've done? I think that's where it gets complicated and potentially a bit of a grey area.
Here's my controversial opinion on this. I don't actually think that the definition of a security should change. I think that the regulation of securities themselves should be more lenient, in the sense that if a company is transparent with its financials and is not actively deceiving people, then there shouldn't be so much red tape around how those securities can trade in a world of decentralized exchanges and VPNs. So that's where I think that my main point of difference with other people is most people are trying to avoid the securities designation altogether. But I think the sounder policy move from regulators in the US would just be changing how securities are regulated, full stop.
Yeah, no, that's seems like a reasonable point of view. Cool. Yeah, we've got like lots to sort of go over. So I'll move on to our next topic. This is one just quite a surprising story. I think it's come up given the sort of conditions we are seeing in the market. This is something that was rumored and sort of actually materialized this week. So it's Solana opening a store. They now have a shop called Solana Spaces in New York City in Hudson Yards. And from what I gather, I mean, I don't live in New York, so I've not been there, but this is going to be a place for them to sort of give educational content, experiences, probably doing stuff like minting NFTs, similar to what you might see at a Solana conference. And they'll be selling merchandise as well. And yeah, I mean, I'm sure there are crypto stores of various kinds, but I think this is the first where one of these sort of very prominent projects has done something like this. Yeah, what's everyone's thoughts here? Nivesh, do you know much about this, and what's your take? Is this going to be the step that's needed towards mass adoption, or is it a bit of a fad, or somewhere in between?
I was wondering people from US could share if they visited the store. But yeah, like it seems like a marketing gimmick, and it could work, but it's just one store, and it's not like what they are trying to do. Like it's not effective, right? You're not trying to sell a blockchain through a store. They want to have more devs. They want to have more transactions. They want to have a blockchain that's working. And even the phone part, I'm not sure that they want to get into the smartphone business. So opening a store just yet, it might have been a small investment from them, given how much they have raised, and it's maybe they're just trying to stay relevant in the market. But to me, it seems like a marketing gimmick, and I don't know if they continue to spend like this. It and with other competition like coming up as well, like we've heard of Aptos and Sui and other layer ones which are like feeding off of Solana's ecosystem. So we have to see, but I don't think it's going to have a very huge effect in the short term. Maybe in the long term, it depletes some part of their treasury.
Yeah, thanks, Nivesh. Now, yeah, you mentioned there a point on the phone in reference to the Solana phone that the sort of company behind it is launching. And yeah, I mean, having seen these two stories come out in the space of a few weeks, a phone and then a physical store, this one didn't especially take me by surprise, given the phone announcement and just things that Anatoly, one of the sort of the co-founders at Solana's Labs, things that he says. It sounds like, from what I gather, Solana sees itself as like they really want to double down on UX and this kind of stuff, rather than what something like Ethereum is trying to do, which is like crack the kind of so-called blockchain trilemma. What's your take on this, Tim? Do you think this store and the phone, is this like a good route for Solana to go down? Do you think it makes sense with what they're doing? And yeah, how does it fit into the rest of the ecosystem?
Yeah, I've been thinking about this one for a lot, and I guess since they released the Saga, which is the Solana phone you were talking about, you make a really good point bringing up Ethereum. So like Ethereum is completely in the realm of the technical here. I see it, right? They're doing their own thing, and I feel like the market has decided that that is the L1, right? It's the second largest cryptocurrency. Nothing's really gonna upset that at the time being. But there are a lot of these like alt L1s. You got Solana, like we mentioned, like Aptos is this sort of up and coming one. And there's a bunch of others, and they're all really competing in the same area here. They're all just sacrificing decentralization, and they're going for like high throughput, and trying to scale to capture the value that is currently transacted through things like Stripe or Apple Pay. And to me, it feels like they're on the right track here, right? Because you're not competing with Ethereum, you're competing with all these other alt L1s, and really, then it's just a marketing game. You don't care about the technology. It's super easy to make a blockchain that has high throughput, as long as you sacrifice decentralization, right? And that's what they do, I guess. And So yeah, it feels to me like they're really focusing on the marketing aspect. They're trying to take a leaf out of Apple's playbook. I said this with the phone, but I say it again. Having a physical store, it's turning the idea of using the Solana blockchain into an experience that it's a complete package. It's like before you could just buy an iPhone online. It'll arrive at your house 2 days later. Turn it on. Okay, you got a new phone. But Apple really wanted to maximize on this idea of having stores in real life. And then there's, dedicated people at the store who are going to make you feel welcome. They're going to guide you through everything, set you up properly with the technology. And I feel like that Solana's trying to do the same thing here. They understand blockchains are difficult. And, if you just imagine trying to get one of your grandparents like set up with a MetaMask wallet and trading on Uniswap, it would be near impossible for most people who aren't really interested in blockchains. So yeah, I think it's a step in the right direction for them. I think they're ahead of the competition in that regard. It'll be interesting to see if this marketing strategy works. I mean, just because they're copying what Apple's doing doesn't mean it'll work for them. But I think I can see what their strategy is, and I'm interested to see how it'll play out.
Yeah, thanks, Tim. I've got our article on this open here, and we've got the cover photo of the store. And now you mention it, yeah, I mean, it does look very much like an Apple store. I don't know if that was a deliberate move from them, but yeah, definitely get those kind of vibes. And yeah, you sort of spoke about marketing there. I'm not going to quote specific numbers because I don't know for sure, but from what I heard last year, the sort of team behind Solana definitely had a massive budget for marketing. And yeah, I mean, it worked, right? And they also had one of the most now famous people in the space who appears on mainstream media on an almost weekly basis as a key advocate for the project. And of course, he was kind of backing various projects in the ecosystem as well. I'm obviously talking about Sam Bankman-Fried. So yeah, maybe it works. Yeah, will be interesting to see. I mean, you also mentioned, Tim, the question of Ethereum and how it's kind of acting on its own. I mean, obviously a lot of conversation at the moment is around the merge. Yeah, it'd be good to hear what everyone thinks on the post-merge environment. What does that mean for the old layer one narrative that was so strong last year? Are they going to be left sort of fighting for the remaining market share, or where do we see that space heading? And did you have any thoughts on this?
Why do you pick on me? So I don't know. I wonder what the difference is going to be really after the merge. So I think in the run up to the merge, I think ETH is going to be super, super strong. And we've got a month, 2 months after that to Thanksgiving. You have to forgive me because I'm not entirely sure on my dates. But with the midterm elections and all that kind of stuff, and macro environment and Fed and money printing and voting and all that sort of stuff going on. Yeah, so I can sort of foresee a really good situation up until that point. But I do wonder what's going to happen after it, basically. I wonder if everything's going to slump back down or what. And kind of go back to my old thing of if the fees are not going to be cheap, then for the time being at least, I don't expect it to have a massive kind of impact. That said, at the moment, I think the fees are borderline acceptable for most people who are in crypto at the moment. You can sort of go mint free NFTs at a fairly low cost and list them on OpenSea and stuff like that, and try and make a little buck out of it. And it's all the fees are cheap enough for that to be possible right now. So Yeah, I don't know. Like, I don't foresee there being a massive change in things. I think if we also expect an increasing number of people to come into crypto, I can't see why the alt layer one space and the ETH layer two space can't continue to grow. There's lots of potential applications that the space can be used for, and so on. And the best networks will grow and survive. So I sort of expect Solana, Polygon, really bullish on those, and Avalanche to do really well. Binance Smart Chain will always do really, really well. And then we've got some other newcomers that we've picked, such as Near as well. They should do well. And then hopefully there'll be room for good old Polkadot and Cosmos are in that, in that kind of zone too. So I think once you start talking about those numbers, like the whole space, that starts to feel a little bit crowded. And you start to think, how many more can we fit in outside of those systems? But they're probably, as far as I can think of off the top of my head, they're probably kind of like the best networks around. And I think they'll be around long term and do well.
I mean, why fit them in it? What is the purpose for having so many layer ones?
I just think that the potential range of applications, like to me, I see it growing, and I still look at crypto and think it has to bring about more real world use than it does at the moment. So for me, things like NFTs, potentially metaverses, potentially social networks, and then when you get into some of these other things, like some of these AI networks and so on, that are kind of integrating with real world services. I don't know. I think there's all sorts of things that the technology could be used for, and we are still mega early days, really. We've got DeFi, that's really good. We've got NFTs, they're really good. Both of those have got loads of room to grow, and there's still many, many more things that would benefit from being part of the blockchain world. When you look at the way that blockchain forces value into systems by tokenizing products or goods or whatever they are, it makes a lot of logical sense that there's a lot of industries that should kind of like consider coming in. Music NFTs, kind of that's in the near term. That's just starting to pick up as well. That's a huge industry. There's lots of things. So I think there is room for the layer ones, and I think even when you actually stop thinking in terms of technology and industries, when you then start thinking about geographical things, applications or uses. So will certain blockchains develop ecosystems that are well suited to people living in certain parts of the world, where they can focus on certain languages or target dev teams or something like that speak a certain language. So yeah, like overall, it's the beginning, isn't it? It's tiny. So I do think long term there's more than enough room for the people that are here now, for sure. The best of the best anyway will survive. The weak ones will be rooted out. And yeah, the space will grow. It's my optimistic take on everything.
Here's bear market Mitchell talking. One of my concerns with a lot of these layer ones is that unless you have already some group of users that you're building for, my suspicion is that many of them are just building, perhaps even if they're engineering something brilliant from a technical perspective, it feels like a lot of these projects are those people who are building something for the sake of building it, even though there's no customers or users that care about the features they're constructing.
Yeah, I think it's a valid point, actually. Certainly within the research team where we've been reviewing products and so on, we've looked at some of the really big blockchains and yeah, kind of acknowledge that they're in that position where they may have a product that's potentially very good, but they have very low usage. We have a lot of discussion around what we think will happen to them, and I sort of tend to be of the point of view that the ones that have got quite large companies behind them with very deep pockets can probably afford to continue building until such a time that they pick up more usage. But there's definitely always that potential that you've got these kind of like build it and they will come kind of like attitude, but you build it and no one actually comes. And I suppose that's when you circle back around to Ethereum, but also Solana, is that they do have a high number of users, and that's something to be positive about and to be bullish on. And again, for those probably the big three outside of Ethereum, the Solana, Avalanche, and Polygon, Binance as well, I should actually say, they're not going to go anywhere. They'll be fine.
Yeah, just thanks for that. And just circling back to ETH, I would note, like you said, the gas fee issue. Although fees are cheaper at the moment, due to just sort of lower traffic, and the price of ETH being lower. It's not going to get cheaper as a result of the merge. And so, it's possible that there are people that are kind of expecting that, and maybe that is, midterm sort of bearish for ETH. And possibly that gives a chance for Solana and others to sort of take the spotlight once again. But I would say as well, there's probably no Ethereum killer, right? Relatively, clear that for many years it's taken the number 2 spot, holds about 20%, Bitcoin holds about 40%, and those numbers slightly fluctuate. But there's no reason that there can't be, these other chains that are, sort of playing into the so-called multi-chain thesis. When it comes to Solana, I look at stuff like the physical store, the festival sponsorship, and I look at just the community around it. When you look at their Twitter following, they have over 1 million followers. So, like you say, if you were to pick one that's still going to be around, it's close to 2 million now, 1.9. Solana would be one of the first ones I pick. If forgetting downtimes or this kind of stuff, because in theory they can sort that over time. If we look purely at how it grew last year and the people that have sort of still believe in it, and having gone to one of their conferences and seen the sort of people there that are building, I'm sure it can pull through to whenever the sort of market revival comes. Cool. Now, another topic, and it's kind of related to this, is a big funding round announcement we saw this week. And this is for the Aptos blockchain. They raised $150 million with a few of the industry's usual players involved in this. And Aptos is developed by some former developers at Meta, the Facebook parent company. And these guys were originally working on DM, the stablecoin project that Facebook was planning to go ahead with and never did. And now we're seeing, Aptos has come along, the likes of FTX Ventures backing it, and a lot of talk. I mean, even someone I met in Paris at EFCC actually was speaking to me about Aptos, another VC, and a lot of people seem to be quite bullish on this. What does anyone think here? Nivesh, I know you were reading up on this. What's your take on Aptos?
Yeah, I think your summary was quite fine. So far, we know that the team that was working on Libra, or later it changed its name to DM. So that team is they have spun off the project, and now it's called. Now they have 2 projects actually going on. One is Aptos, and the other is Sui. And the thing about it is that they are coming up with a new smart contract language. So we have heard of Solidity, and we have seen blockchains like Near and Solana going forward with Rust. But so DM was working on something called Move, and that was supposed to make it easier for devs to build applications, and it provides some kind of security as well. So I'm not sure about the technicality of it, and I don't think anybody else can be sure about it. We can now see on Twitter that praises about it, that it's better than Solidity, and it's going to be groundbreaking, and it's this is the one that's going to rule them all. But we'll only see the result once we see real world applications. But besides that, the fact that they raised 150 million from like FTX, and I think Multicoin is also in there. Polychain might also be there. And in March, they also raised, I think, over 300 million from Andreessen Horowitz. So I guess that's like comprises of all the big VCs that we know of in the space. So and so yeah, I think their strategies that it could be big, and that should be our strategy as well. So when you can purchase the token, if like when it starts trading, I think it could be a good entry. Like if it's now during the bear market, then it could provide a good uptrend in the bull market, because like we saw previously with coins like Polkadot or Near or Cosmos, or because even if these are not too popular, their price, and even Solana, like they were trading at very low prices because they were not really popular in the market. And when they started coming up with applications and with such a stellar team and backers, they can come in the light very quickly, and that can bring good price gains. So something really to look forward to. And we have also seen some of the projects that were working on Solana. They have kind of shifted. They are working with Aptos now, and I think the marketing lead of Solana also shifted. I think his name is Austin. He shifted to Aptos. And yeah, on the development side, I think they have had 2 testnets where you could participate as one of the node validators or the validators. So I think we should really look forward to more updates on that front, because if let's say if you participate in that, and you might be eligible for an airdrop, so free money there. And yeah, I'll be closely watching the space, and we'll look forward to these 2 blockchains. They might bring good gains in the next bull run.
Thanks, Nivesh. It sounds like you're potentially quite bullish on this one. I would just clarify, so they had a Series A round, and that was like the latest ones. Their total funds raised this year is 350 million, and this one was like 150, and they had some prior raises to this. So at the current amount they've raised, their valuation is $2 billion. And like you said, Nivesh, many of the kind of key players that we see cropping up in all of these big raises, so Multicoin, big Solana backers, FTX Ventures, Andreessen Horowitz, and led by FTX Ventures and Jump Crypto. What I found quite interesting about this announcement when it came out, there was like a bit of pushback from some people. So we saw, there was one tweet I saw was someone asking, how many millions does it take to launch a blockchain? And Kobe, who sort of everyone knows from crypto Twitter and Up Only, responded, as much as you can get. So it does seem like there are some people who are maybe quite skeptical. And when you look at the numbers, they have raised quite a lot. Stefan covered this, and he sort of noted how when Ethereum launched, it raised like under $20 million, and they've obviously got a lot more than this. What's your thoughts, Tim? Do you think this matters, and are people right to question it, or are you bullish as well?
People are absolutely right to question it. Let's not forget what happened with the Solana ecosystem, where you had these projects with stupid valuation. What am I trying to say here? They had stupid, fully diluted valuations with 1% of the tokens in circulation. And then they pumped massively. You had all the VCs shilling them wherever they could. And then obviously it was the VCs, the token unlocks came along, they just dumped on retail investors and just destroyed the entire ecosystem. And, there's absolutely nothing right now that would tell me or indicate that that's not just going to happen again. it's the exact same VCs. It's Jump Crypto, FTX, and I forget the other ones you mentioned, but I remember seeing the same posts on Twitter that you mentioned. So yeah, I'm skeptical, but on the other hand, like Nivesh says, you don't want to fade this. Like it could be a very good investment when the token finally launches and the blockchain gets up and running. In the same way Solana was, that was massive gains to be made there if you had clued yourself in on Solana early. But for long term, I think it probably depends on how good this Move programming language is. Is it really as good as people say? Is it so good that people are going to ditch Solidity or Rust? It's just because they want to use Move. If that is what will happen, then yeah, that's incredibly bullish and something you shouldn't definitely should pay attention to. But especially when there's a lot of venture capital involved, they'll make a lot of big promises, they'll hype it up. So I'm also aware of that maybe it's a little hyped up right now. I guess maybe I'm just salty that I didn't know about it when the test nets were going. Maybe if I had participated in the test nets, I would have a more favorable view. But I don't know. That's just where I'm at right now. Not trying to weigh in one way or the other. Just saying that's how it looks to me.
Cool. Yeah. Thanks, Tim. Well, yeah, sounds like one we should be following either way. So yeah, definitely more coverage to come on Aptos and Aptos Labs. Now, just quickly before we kind of move on to the market discussion and sort of the big stories of the week, and I wanted to get your view on something. Now, we know that this week, for those who aren't aware, there was the deadline close for Damien Hearst's NFT project, the Currency, and this was basically something he, obviously world famous artist, has released many famous works over the years, lots of paintings, but this was his first digital work released in July 2021, and it was released with a slight twist in that you could buy the NFT for, it was $2,000 at the time, closer to about $8,000 now in ETH terms. And when you bought it, you had 1 year to decide if you wanted to keep an NFT or redeem it for a physical copy. Now, to redeem it, you had to burn the token. And if you didn't redeem it after the deadline, the physical copy of the polka dot design that each one had would get burnt. Now, when the results came in, it was almost exactly split down the middle. So 51% of people burnt theirs to get the physical instead. And 49% kept. And Damien himself put out a tweet saying that he had 1,000 pieces and he kept the NFTs for all of them. And I'm calling you up because I know you have one of these. What did you pick and why?
I picked the NFT. I just went with. I thought so I did beforehand research, or even to go further back. Sorry, I've previously researched the value of Damien Hearst pieces and other similar polka dot collections. Or they're not polka dots, but we all know what we mean. Of edition numbers in around about 1,000. Go for around about, I think it's about £10,000 or dollars, I can't remember which. So that would sort of imply that if there's, if you're getting on for sort of roughly 5,000 of these things available, they should be worth in a region of sort of 1,000 to 2,000 each. So I kind of took that as a guide point, and then considered the next thing was considering how easy it would be to sell, and kind of trying to sell the physical piece just looked like a lot of hard work. So between that and being fairly busy as well, and arguably possibly forgetting about it a little bit, if I'm being honest, I ended up keeping the NFT. And when we found that Damien Hearst had kept all his NFTs as well, and there were slightly less NFTs, I sort of was pretty glad that I was on the right side of the supply thing, and hopefully he won't market dump all of his just as I'm trying to sell mine.
Yeah, I mean, if I had one of these things, I mean, if I was smart enough to buy it at 2000 when it was a pretty obvious play, I think I would have kept it as well. And I would say you probably don't need to worry too much because Damien Hearst is one of the richest artists in the world. So I wouldn't worry too much about him dumping. Probably a good call there, Ant. Thanks.
Yeah, at one point they were up to, I think the most expensive one went for 125,000. So I didn't quite sell the top. I should have sold it ages ago.
Fair enough, but yeah, like any asset, it can always come back potentially. Cool. Now, I guess onto the headline story of the week. We saw over the past few days something I mentioned at the beginning, and it's something we've all been following very closely over recent months. The Federal Reserve announced another 75 basis points rate hike, and market didn't especially react to this. It was relatively subdued from what I saw. And then the following day, we had the news that GDP in the US retracted again in the second quarter. So it was, I believe, minus 1.6%. It shrunk by in Q1, followed by minus 0.9% over the last quarter. And historically, this has sort of pointed to a country being in a technical recession. The White House has sort of come out and said that this isn't the definition for a recession these days because they look at a lot of data, although it's what some countries would use to determine it. And in the fallout from this, we've seen quite a lot of momentum actually in crypto asset prices. So BTC and ETH both jumped off the back of the announcement yesterday, the print when it came out. BTC topped $24,000, and last time I checked an hour ago, it was still sitting above 24. ETH has also, it's 23.8 at the moment. ETH has also looked very strong, probably helped by the whole merge narrative as well, about $1,700. So yeah, I'd like to get our resident trader up to discuss his take on this. Nathan, what are you seeing, and are you surprised by the response to what should be relatively negative news? What are your thoughts here?
Yeah, I'm not surprised, to be honest with you. I thought that the market had been acting in a way as if it looked like it wanted to go higher for a long time. So I think that the situation at the start of the week was probably the most interesting for me, in that we weren't able, I think, for a 6th straight week, which is easily the longest period in history for Bitcoin, we weren't able to close the week above the 200-week moving average. Yet again, despite a move up on Sunday in the late hours, we moved, I think, to 23,000. We dropped $500 very quickly, and we had another bearish close, and that kind of set up the precedent in the week that the market probably needed to test lower before it moved higher again. So we've got that kind of classic scenario at the start of the week where we dropped down to critical support, which was basically 21.6, 21.7, and we kind of stagnated around 20,700 to 20,600, and because we weren't able to break under that area, there was no meaningful sellers. It looked like a lot of a classic accumulation trade, for lack of a better word, that there was lots of people accumulating at that levels, and obviously the Federal Reserve decision maybe put a seed in a lot of people's minds that the Fed is going to be more data dependent, and they're kind of acknowledging that the economy is slowing down. And I thought that it was all technically perfect how it all worked. There was no new lows in the market, and Bitcoin since made a new high around 24,400. So I think that's all very positive technically, and going forward now, what probably needs to happen is we need to get this close above the 200-week moving average. on the weekly price close this week. So like I say, it's been 6 weeks underneath. I think if we close around current levels, then it's going to be another classic trade in that we head down to test the 200 week, and if that holds, then the market's probably going to race higher next week. Like significantly race higher, because the market will be aiming for that benchmark, that something that it hasn't been able to do, and now it has been able to do. A lot of traders are going to get the green light to probably add to positions. So people that were bullish at 21,000 or 20,000 are probably going to look to add to those positions next week. So that's what I'm looking for, and I'm looking for a move at a minimum towards 26,000, possibly 27 if we start to clear like the 24.4 area next week. I guess you've got to talk about what happens if we don't do that, and also like what's the short-term trend now, as we are in a bear market. What is the short-term trend? So the short-term trend for Bitcoin is now bullish. So I'm defining that on the 4-hour time frame, the 200 period moving average, which is a moving average that Bitcoin hasn't been able to get above since April. So it's spent its longest period above there since it's first started to turn really negative in April. So these are really some very good signs. So I think as long as we continue to hold kind of the 23,000 area, we should probably expect a final test of maybe 22.8, 22.7, and if that holds, I think we're going to go a lot higher next week. If we aren't able to do that, then I'd probably look for the market to test back to maybe 21.6 or something like that next week, and then that kind of sets up a much more difficult trade for people next week in terms of what to do. But the fact we've made a new high and we've broken past the previous high at 24.3 are all very good signs, and I think we're trading now at the best level since late June. So if we can gain some traction above the 200 week, then I think next week Bitcoin and the rest of the market can fly. And I'll just add that I'm especially bullish on Ethereum. I think it can easily get to 2.224 very quickly if we see a breakout in Bitcoin next week. I wouldn't expect anything to hold Ethereum back based on what I'm seeing, and based on the fact that it's looking much more bullish out of the two cryptos, and Ether BTC is looking very good as well at the moment. So that's my current assessment of the market.
Thanks, Nathan. Always, great to get your insights.
Thank you.
So you're looking out for the Sunday close for the monthly as well.
Yeah, for sure. The monthly will be big.
Yeah, I was speaking to Ali earlier, and he said that it looks like I don't know if this is an indicator you use, but the Tom DeMark is presenting a buy signal for the first time on the monthly.
Excellent.
Yeah, it sounds. We'll definitely be watching that closely as the weekend draws to a close. We're just coming up on the hour almost. Did anyone want to intervene on how they're playing this period, and their response to the macro events we saw this week? I can speak for myself. I'm mainly in ETH and have been for a while. A little bit sidelined, so it has been slightly frustrating to see things move up, but kind of pleased to be riding the wave as well. And if what Nathan says is accurate, then interested to see where things head through August and into the obviously the lead up to the merge as well. Anyone else?
Yeah, I moved a few. Luckily, I moved a few things. I sold a few things and bought some ETH 2-3 weeks ago, something like that. So that was that kind of feels good. I think it's a good idea to be in the slightly stronger assets at the moment, and it kind of looks like ETH is going to be probably one of the main plays, isn't it, for a good few weeks ahead yet. So yeah, that's my kind of plan. Just stay there, and unfortunately, I didn't DCA into anything just yet. I think I might have been rugged by the market, but we'll see what happens.
Cool, yeah. Good luck with that trade. And Mitchell, did you want to close us off? Because you usually have some sage advice when it comes to these conditions?
I don't know about sage advice, but my unqualified opinion is I'm starting to make some big buys back into the market. And even if I'm wrong, the downside is not going to be so horrible. I mean, it really depends on your individual situation, but I've been sidelined for like 7 or 8 months now. And now that I've seen, I don't know if things have stabilized, but we're probably at a local bottom at the very least. So I'm not going to regret if prices fall another 40 or 50% and I have to make another buy.
Cool. Thanks, Mitchell. Now, that brings us to the hour. So, I would say thanks to everyone for checking in. Best of luck if you are trading the monthly close and Bitcoin into next week. And we'll be back next Friday.